Hello, everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'm a Senior Account Manager. I'll be leading the session. As we get going, let's do a quick systems check just to make sure everything's up and running fine for everybody. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. Welcome, Gene from Montreal and everybody else. As we go along, some things to keep in mind before we get into the fundamental analysis and take a look at the technicals on the live movements on my demo. Before we do all that, keep in mind, obviously, all investments have risk. This is also true when it comes to Forex trading, when you're trading CFDs, spread betting, options, etc. No one trade is guaranteed to bring profits. I think we all understand that. And that's why in one manner or another, you should think about managing risk in a way that makes sense for you. And to manage risk, you have some different options. You obviously can use a stop loss on your trades to kind of cut things off after a certain amount of exposure. You can set up hedge positions with buy stops or sell stop pending orders that can kick in the opposite direction of your original trade, thereby covering risk or eliminating risk if things go too bad the wrong way. And also there's a unique tool if you're using the AvaTrade Go mobile app or the AvaTrade web trader platform called AvaProtect. That's a service or a tool that you can put on as your opening trades as protection against losses for defined time periods for a small premium cost. And we'll go over how that works when we take a quick look at the web trader platform before we get going on the fundamentals today. So just keep that in mind as we go through things from an educational perspective. We're going to go through some ideas and some strategies and some concepts that should be helpful for new people. I know we have a number of new traders that come to the webinars, and also some ideas for experienced traders as well that can be helpful in terms of improving upon existing trading strategies. So not to be taken as financial advisement, but from an educational perspective, we're going to go through what I believe will be useful ideas and information for you. As we get going, just some general ideas about what is fundamental analysis. Basically, it's looking at what's happening in the news, what's happening in terms of economic announcements, what's happening in terms of breaking headlines, and trying to get a handle on how that will affect the movement of different assets on the charts. So the idea here is to figure out which way is the wind blowing for different assets with our fundamental analysis, and then you jump on the charts and find your proper technical entry points and exit points that make sense for you, keeping in mind the fundamental push that might be helping those assets move one direction or another, and that might help you decide with preference which technical entry points you trust better than others. So now there are a couple different types of fundamental news or fundamental events. And one type would be regular economic events. And we'll take a look at some of those that are happening today and that have happened already today. We know exactly what those announcements will be, whether they're factory production numbers, PMI numbers, unemployment figures coming out, whatever it might be. We know exactly what they are, when they'll be, and what assets they're expected to affect the most. Okay, those are what we call regular economic events. It's one type of fundamental news. The other type of fundamental news would be what we call extraordinary economic events, which we've had plenty of this past year, whether it was Brexit or then the pandemic, now the US election mess that's occurring. You just don't know what headlines might come next. And there are headlines about OPEC Plus, whether they're going to stand by production cuts, increase production, and how that can affect oil prices. And so these types of extraordinary events, you don't know exactly what headline it will be or when it will come. You just know that eventually something will happen. that will move the markets. And so with that type of fundamental news, you might think, well, how can you plan for the unknown like that? And the idea is you certainly can with strategically placed pending orders. Be ready for a big move, okay, that might come. And if it comes, you're in for the ride. And so both types of fundamental news we'll take a look at today, and then we'll work some strategy ideas on that fundamental news as to what you might look to do moving forward today and through the week. Lorato, yeah, the webinars are all recorded. You can record them if you wish as well, but they are all recorded and uploaded to our YouTube channel. And so just go to YouTube, keyword search AvaTrade channel. You'll find our YouTube channel. You'll also find a lot of others talking about AvaTrade. Make sure you're on actually our YouTube channel. And there's a section for English webinars. You'll find mine and also Naeem Aslam. He's our chief market analyst. He does a morning thing each day, a quick 2-3 minute review of what's happening each day that you could check out as well. All right, so as we go along, if you have any other questions or input, please go ahead and type in the chat box what you're thinking, what you'd like to share, etc., because it can definitely be helpful for everybody as we go along. Now, just to start out, this is obviously AvaTrade's website, and some of you might be joining us from other areas of the world. You might, like, if you're from Canada, it'll say Friedberg Ava on the website because we're partnered with Friedberg in Canada. So the look can be a little bit different, but it's pretty much the same thing. If you go to trading platforms, you could go over, check out AvaTrade Go. And what's nice about AvaTrade Go, it trades on your MT4 platform, it trades on your MT5 platform, but it gives nice improvements in terms of the app compared to the MT4 and MT5 mobile apps. So you can trade on those accounts using our custom-made mobile app. What's nice about it is you have options like AvaProtect on gold, silver, and FX pairings. AvaProtect is a feature where if you choose it when you're opening a trade, you can choose by the hour, by the day, to protect against losses for a defined cost. There's a premium cost. Any losses during that covered time period are added back by the protection. And if the protection ends, the trade can keep running. If you're in profits, all the profits are yours. So it's a nice risk management tool. The take profit and stop loss, as we'll see in the web trader platform as well, when you program the take profit and stop loss, it will tell you how much you're risking. For the trade size you entered, how much are you risking in your account currency calculated right next to where you type the stop loss number. So you know before you open the trade, what's my exposure to the stop loss? How much would I lose? And same with the take profit. How much would I make with this trade? So very convenient, very useful for your risk management aspect of things, and just making things simpler as you open positions to know what's happening. Good question. Someone's asking the daily analysis that's posted by Naeem, our chief market analyst. It's in the English section. So when you're on our YouTube channel, look at the different pages, and you'll find a page for the English webinars, the English section. You understand we also have French, we have Italian, we have lots of languages around the world that we cater to. So you would want to go to the English section for the English webinars, and also talk to your account manager if you need a link directly to that section on the YouTube channel, okay? All right, so if we wanted to go to the web trader platform instead of the MT4 or MT5, you just log in here. And when you log in, you find yourself in this platform, the web trader platform. You can slide the chart bigger if you want for managing your chart. You can make it full screen. You can put it back. Here's your favorites list. You can add whatever you want to and from the favorites list. We can search really easy for assets here. So if I want to find, I don't know, gold, I pull it up. There it is. Brings up the gold chart down here. I can find gold in my favorites list if I want. I believe I have it here. There it is. And so let's say I buy or sell, doesn't matter. And here's the order window. And some of the features I was talking about, Ava Protect. If I choose that, okay, for 1 hour, for 5 ounces, costs me $14. If I think there's huge volatility and I'm a scalper and I say, wow, with 5 ounces, it would only need to move $3 in value to make that back. If that's my premium cost, now it's all profit after that. If I factor out the premium cost. So if I expect huge volatility, that's not much of a cost, maybe with 5 ounces of gold to make more than the cost of the protection. And if I lose, all of it's added back during that time of the protection. What if I'm a longer term trader? Well, I might say, well, I want to protect it for 6 hours or a day or 2 days. And the maximum is typically 2 days, 3 days, depending on the asset that you're looking at. For gold right now, 2 days coverage is the maximum. And it's only $58 for 5 ounces. We've all seen gold move $50 in a single day, right? So if it even went $10 in the right direction, with 5 ounces, you've pretty much made back the cost of the premium. And in a couple of days, it could go $100 the right way or the wrong way. In the case of the protection, saving you any further loss beyond the cost of the premium. Now, let's say you didn't want to do the protection. Maybe you're just going to put a stop loss. Okay, fine. Maybe I say, okay, I'm buying at 1858 or so now. I'll put my stop loss at 1838, maybe $20 away. And now here's how much it would cost me. If it went the wrong way and hit my stop loss in my account currency, here it is. Possible loss calculated for me. Maybe I say, you know what? I want my stop loss here, but I don't want to risk that much. So then I say, okay, let me lower the trade size. Now I lower it to 4 ounces. Now I'm only risking 83 or so. Lower it to 3 ounces. It's immediately calculating my potential loss for that trade size to this price. So it's foolproof in terms of understanding what you're getting yourself into before you buy or sell. Okay. Okay. So Stoyanko, when I have clients that are in my portfolio, the signature down at the bottom of my email has a link that takes you directly to the English-based webinars. But if you're not my client, then I haven't sent you that. So check with your account manager, and I'm sure they can get it to you. Okay, so that's how the stop loss works. Same with the take profit. If I say, okay, I want to take profit at 2,000, great. With that trade size, I make 421 or so. I'm only risking 64. So I say, wow, I could try this, 3 times? If I'm right once, I make an overall profit. So maybe you like that risk reward and you take the trade. So you go into it fully informed with your risk management, maybe better understood by using the web trader. Because on the MT4 and MT5, it doesn't calculate possible profit, possible loss for you based on your trade size. And also you see here, it's telling you how much is required for margin to open the trade. You know, if you only had $25 in the account, you can't open it. It tells you 27.9 required for margin, right? So it makes things simpler in the order window. Now, we are talking about fundamental analysis today. So what we can look at is how can the web trader bring you fundamental analysis? And it's very simple. You go to Trading Central. And by the way, if you're not on a live account, you don't have access to all the Trading Central features. You can see the economic calendar with a demo, but you can't get into the premium features here without a live account. And the reason being, this is a premium service. AvaTrade has to pay money to have Trading Central available to our clients. We do that for free for our live accounts. We provide it for free, but just not to the demo account. So on a live account, you will see something like analyst views. These are free signals, everybody. Look at this. Pick the asset. It breaks down the technicals on the chart, shows you which way the breakthrough move could be. Looks like an uptrend on USD Canadian, and you see what their preference is, long positions above such and such price. It gives you the full signal right here. Price levels, support and resistance levels, everything, okay? This is here for everyone with a live account. It's free, and it breaks down the technical analysis. Now, the fundamentals behind this, why is the USD rising and the Canadian dropping? Oil's been dropping. What fuels Canada's economy the most? What's the biggest contributor to Canadian GDP? Oil. And if oil's dropping today, which it has been, then it makes sense. The Canadian would weaken and the USD might go up. So there's a fundamental reason behind this signal. Okay, so you understand we're going to talk about the fundamentals in a minute, but this is a signal that without even understanding the fundamentals, just looking at the technical analysis here, they're showing you what's expected, and it just so happens to fit the fundamental news today as well, right? And they should. Typically, that's what you'll see, whether it's Euro USD, USD Swiss franc, whatever the case may be. Why is the USD strengthening against most everything today? Because it's been viewed as a safe haven currency of late. And there's a lot of fear on the markets today. So very nice tools here. We could also look at Market Buzz, which gives you the fundamental news. It'll pop up with a pictogram showing you what's trending the most. Still Pfizer, Apple, Amazon, Google are trending the most with the most stories. If you want to see, well, what's going on with Tesla? Well, let's take a look. Click on it. It brings up the news stories about Tesla. You say, oh, okay, what's this about Bank of America with Tesla? And you want to learn about it, click on the article. Gives you a little snippet, and you can also pull up the whole story. There it is, okay? Very nice tools within this platform for both technical and fundamental analysis. Now, if we go to some of the fundamental news I pulled up just from headlines, and this is very easy to do for everybody before you start doing your technical analysis, before you jump on the charts and trade, maybe figure out which way is the wind blowing, right? So we take a look and we say, real quick, we can see the futures have been red all day. US market hasn't opened yet, but US 30, US 500 in the red all morning, okay, into the afternoon now. So this is yesterday, closed in the red also. So it looks like the negative momentum is continuing from yesterday into today's futures. So when the US market opens, it likely could open down, okay? Now, volatility index is up about 1% right now. The VIX 500, that's the volatility index, or some refer to it as the fear index, okay? When this is green, when the fear index is up, usually the futures are down, and that's exactly what we see here. So there's negative sentiment on the markets right now. We see that in this little snapshot real quick. Also, you see the dollar index. So the dollar as the dollar against a basket of other currencies is strengthening quite a bit, up 0.37%. Okay, that's a lot when it comes to a currency to be up nearly 0.5% on the day. So everything is ripe to see that there's fear on the markets. Dollar strengthening against other currencies, fear index is up, futures are red. You can see that within 1 minute of looking at this little snapshot on this website. Then you read the headlines. European stocks slide on virus fears. So now we have a reason why there's fear. It's about the virus, okay? There are areas around the world shutting down their economies again with a second wave of infection. Even though there's a vaccine almost ready to go, it's not distributed yet. It's not helping the current environment economically, where people are hurting and businesses are having to shut down again. I'm reading a question here for a second. Good question. Mancoba, the AvaTrade platform is designed to be a bit simpler than the MT4 or MT5 platform, easier to use. So you may check it out and you might like it. Okay, so Emmanuel, good question. The S&P 500 and the S&P 500 VIX are two separate indices. The VIX is measuring the volatility of the 500 companies on the S&P 500. The higher the volatility, right? If volatility's up, usually the S&P 500's down. And that's exactly what we see now, because higher volatility usually means fear, and usually stocks sell off with high fear. And that's what we see right now. VIX index is up, S&P 500 companies are down, okay? The futures are down 0.45%. The VIX index is up over 1%. That's the typical relationship you see. Not always, but as a rule, that's what we usually see, okay? And so we see fear because of the virus spreading. We go to another headline, we see dollar going higher. Again, because of fear. The dollar is seen as somewhat more of a safe haven than other currencies. Yeah, same thing, Peter, with Dow Jones. And honestly, same thing with the DAX, the Nikkei, all the major indices. The economy is so global anymore. If you see high fear on the VIX index, if this is up in green like we see here, usually it's likely that most world indices are going to pull back. Okay. Dollar strengthening. What else do we see here? There are some scheduled economic announcements later today out of the US that are quite large. Jobless claims, manufacturing numbers, etc. And the Philly Fed with some information coming out. So, and existing home sales later in the day out of the US, out of the European Union, the European Central Bank president will be speaking. So a lot that could move the markets through the day today, especially in the US and the European Union. Some major economic announcements scheduled. That's something to understand. There's huge potential for movement. There's already fear on the markets, and then you have really big announcements and speeches being done out of the US and European Union through the day today. So we'll keep that in mind as we're thinking about strategies on the charts. Mancoba, good question. Typically when fear is high, gold tends to strengthen. The only thing is the relationship flipped during the pandemic, and with fear being really high, what we've seen is gold liquidate and folks buying into the USD to have cash on hand. Okay, so what we've seen of late in the past months through the pandemic is as the markets pull down because the USD is strengthening and people are wanting to liquidate and get cash in hand, we see gold dropping as the markets are dropping. And the opposite, if you look at the past months, as the Dow Jones, the Nasdaq, etc., hit all-time highs, so too was gold. So gold was going up with the markets and down with the markets, which is not the normal relationship that you think of for a safe haven asset. Usually gold would strengthen when markets are dropping and vice versa. So it's been interesting. It doesn't mean that relationship has to continue. I think as we get out of the pandemic and we have vaccines mass distributed and a lot of this pandemic fear disappears, then maybe we'll see the normal relationship return. But right now things have been flipped a bit in that relationship, and it's good that you noticed that. Okay, so again, we see gloomy headlines. World stocks ease further from highs. Oil dips. Why would oil drop? Well, if there's fear that economies are going to be hurting, that tends to put less demand on oil. So it creates bearish pressure, downward pressure on oil when we see fear on the markets and major indices dropping. Usually that tends to bring oil down with it. Unless there's some separate fear of, I don't know, war in the Middle East or something like that that could disrupt oil supply, that type of fear then can drive oil price up. So you have to understand, is it economic fear or is it fear of some other kind? But economic fear tends to bring oil down along with the drop in markets. And again, always with a caveat, you can't bank on anything being 100%, right? But that's the general trend that we see. Again, gloomy headline. US COVID deaths top 250,000. New York City schools closed. No more in school classes. What's that going to do to the economy in New York? You know, parents have to stay home with their kids. If they're not going to school, a lot of times means they can't go to work, means businesses are hurting, people are hurting. There's a lot of argument about whether that's even a good idea health-wise to keep the kids home because they seem to be the least susceptible to anything. But when it comes to COVID, the least susceptible. But They could be spreaders is the worry. So they've shut down classes in New York, and that's just adding to the fear around the world. Okay, the UK and other places also initiating more lockdowns. So kind of doomy and gloomy today fundamentally. So then we go to the charts. Okay, we can go to the charts then with an understanding of what direction might we prefer to trade on some different assets now that we understand the fundamental picture, right? It's always worth 5-10 minutes to take that quick look, then get on the charts and trade the way that you think fundamentally it makes sense. Now let's find the technical entry points. Now this, I have this up from our session just Tuesday. We did a webinar. We looked, someone asked for a gapping strategy in the last webinar, and we took a look at Tesla because it opened with a big gap going into Tuesday from Monday. And so then we took a look, or actually it was from Friday it was Tuesday to, Monday to Tuesday, looking at the date, 16th to the 17th. So we're looking then at what happened. In the webinar we said, hey, we trust this line of support now because that's where it gapped up past. It came back down, hit that spot and bounced. So we were looking at a move in this area here when the price was right about here. And we said, put your stop loss below the bottom of the gap or the top of the gap. Price gapped up. And we said fundamentally, if you buy, you're with the fundamentals because the upward gap shows positive momentum for Tesla. There was something fundamentally that caused that upward gap. So once it found support here, we said, okay, let's buy, and we'll put our stop loss into the gap. We don't think it'll re-enter the gap if it's truly positive momentum, and we see what happened. It came flying up. First spot to take profit is here, which is what I did at the first resistance as a scalp, but you see it continued right through yesterday as well. Upward momentum. These gaps sometimes clue you in as to the direction of fundamental momentum. So this was just a nice example of something we did with the technical analysis webinar, where we didn't even need to know what was the fundamental news that helped Tesla gap up. We just know, technically speaking, it was an upward gap. Trading the gap means if it gets near where it gapped up to, if there's a support level, in this case, you would buy with your stop loss. If it re-enters the gap, you get out. And in this case, it bounced up like we expected, and there it went with the upward momentum. Okay, so let's take a look at some assets that make sense for what we're looking at today. And by the way, Tesla's not moving right now because it's a US stock. The stocks don't move until the market that they're from opens, and US market didn't open yet. Let's look at crude oil. We mentioned oil. We mentioned that it was downtrending. Let me get rid of all these lines I have on my chart, and we'll take a look at a couple things. So objects list. If anyone doesn't understand how to get rid of lines you've drawn, this is a good way to do it. Just go to the objects list and delete until they're all gone. Easier than doing one at a time manually. So now we look and we say, okay, 15-minute candles, we do see a downtrend. Down, 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 down. It's been trending down all day today. We understand why. There's fear on the markets. Economies are being shut down and frozen up again because of the pandemic spreading worse again. And so there's downward pressure. The question is, where might this downward pressure end? Okay. And or where might it be verified that it might continue, right? You see I have a sell stop down here at 40, entry point at 40.7. Sell stop enters if it drops lower, it'll sell. That's a pending order that sells from a lower point. You'd say, well, why would you do that? Why would you sell from a lower point? Why not sell now? Get in at the higher price. And the idea is, if we go and do our technical analysis, if we look at one-day candles, look at this gap from the past. Okay, once it entered this price range here, it plunged all the way down to here. There's no support between here. Now you see it's been ranging between that zone. These are one-day candles, so for months. Top of the gap, back down, bottom of the gap, back up, top of the gap, back down. It briefly went above the gap and then re-entered and dropped all the way to the bottom of the gap again here. Top of the gap, down, bottom of the gap, up, top of the gap, down, bottom of the gap, up. Now it's at the top of the gap again, trying to decide what to do. Okay, so the question is, when do you decide that it entered the gap and might fill the gap all the way back down like it did here? You see, here's the gap. Once it enters the gap, usually it's got enough momentum to drop to the bottom of the gap, which is what we see here. Okay, this is what it's done. When I say usually, I mean look at the history. Look at the examples. Okay, so now we say, okay, it hasn't really entered the gap completely. If we look at this chart, it's still just above entering. So that's where we find this entry price. When I go back to 1 hour candles, if it hits this green line here, then I've entered the gap. Okay, so that's the pending sell stop. If it hits that price, then maybe it'll drop further and I take my profit down further. And my stop loss is just a little ways up. I would expect if it's a true breakthrough into the gap that once it hits this price, it shouldn't go back up. And if it does, then I'll take the small loss, right? I take the small loss. So, or I go after a much larger gain on the way down, okay? So this is another strategy that someone was asking about in a past webinar. Give an example of trading the gap. Well, here's an example. I'm waiting to see if it'll re-enter the gap. Why do I think it might? Because of all this bearish news, right? If this pandemic continues to get worse again before the vaccine is mass distributed, you could see oil plunge right back into this gap and maybe try to fill this gap all the way down to, look at the bottom of the gap, the price is $35.90. That's like $5.50 lower than it is now per barrel. That's way down. You see, my take profit is a scalp. Look here, you see the red dotted line on the bottom? That's where my take profit is on my sell stop. It's not even anywhere near the bottom of the gap way down here at 35.90. A longer term move would be, if I go back to the 1 hour candles, not to put my take profit here, but to put my take profit way down here at the bottom of the gap, right? 35.90 is even further down. The bottom of the gap is actually down here, way down here. Look at the small risk then to my stop loss if it enters, risking just a little up here, potential profit to the bottom of the gap way down here. I tend to be more of a short-term trader, so I would be looking to take a profit if I can slide my stop loss back up with maybe a 3-to-1 ratio, something like that, 4-to-1 ratio, potential profit to risk, but it's up to each individual trader. So what might you want to do on oil? Well, right now, it did not break into the gap. Someone's saying they don't have any sound. Let me just let them know that it's on their side. Okay, so you have two things you could do here with oil, right? OPEC doesn't want to see the price of oil necessarily plunge again. So you could likely have some kind of talk come out that, hey, we're going to cut production or we're not going to increase production. So you might say, listen, I'll take a chance that, remember the type of fundamental news I said, you don't know when it might come, it could come at any time, right? So I've got my pending sell stop ready in case it breaks into the gap. I've got my sell stop ready to go. I also could say, listen, it is still above the gap. So basically it's on a support level right now. Oil is sitting on a support level. It hasn't broken it yet. It hasn't broken into the gap yet. So that gap, the top of that gap should act as support, technically speaking. So I could say, listen, I'm going to take a shot here and either buy by market or put a pending buy stop, right? Why would I put a pending buy stop? In case something comes out that makes oil come flying back up, right? So I could say, I'm not going to buy yet because it's not an uptrend. But if oil breaks above 41.75, above this little resistance point here, if oil breaks above 41.75, then maybe I'm convinced it's truly bouncing off that support and climbing, right? So I could put a pending order up here, a buy stop to say buy from here, rather than trying to buy now when it hasn't established an uptrend yet. So if breaking news comes, it shoots oil up, I'll get in on a buy. It'll hit my buy stop. So I say buy stop 41.75. And my stop loss then would be if it broke back down towards the gap, maybe 41.2. If I can type it correctly, there we are. And my stop loss, sorry, over here, 41.2. Take profit is the next question. Where would I want my take profit? Could be at the next resistance here, or maybe a higher resistance level you see up here. So 42.65, there's a resistance level here where it hit and dropped not that long ago. So maybe I say 42.5 could be a spot to take profit. If there's a big enough story to shoot oil back up, like maybe OPEC Plus saying, yeah, we're going to cut production again. You never know. That story could come out at any time. So I've got my buy stop waiting for it. If it hits this green line, it buys, takes profit at the first major resistance up here. Okay. So now I'm ready. If oil breaks into the gap, I'm selling. If it breaks, bounces up to establish an uptrend now off of this top of the gap, then I'm in on a buy. Just waiting for the fundamental news to break through one way or the other with this technical movement on oil. Does this also apply on swing and position trading? Yeah, Mancoba, you can apply these types of strategies in lots of circumstances with fundamental news helping to make the technical moves come through. If we look at S&P 500, we see a downtrend that fizzled, right? And these are 5-minute candles. So I see a support resistance level here. You see this level? That is so clear to see. This was support, up, took momentum. Look at the size of that candle compared to all the other candles. That's what we call a breakthrough candle. Boom, it broke this little support and down it went. Now the support, classic example of old support becoming resistance. Once it broke through, now it's resistance. It's hitting and dropping, hitting and dropping, hitting and trying to drop. Okay, so if you think later today when the US market's open, you could have further negative momentum, then your move would be to sell right now and put your stop loss above this resistance. That would be a scalp type move. The other idea would be to zoom in on 1-minute candles and say, well, it's an uptrend right now. Let's wait and see if it reverses before I sell, right? So there are a couple different ways to look at this, but you see the clear resistance now. Resistance and down. Resistance, 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 down. Right back up. It looks like it wants to break this resistance level. It really does. And if it breaks this resistance, you could be looking at a climb to the next resistance level here. Okay, the next resistance is up here. So let's say you're going with the bearish momentum today, and you say, well, I think this might drop, but I think it might push up higher. So you say, okay, if it comes up to this resistance level, then I'll sell. Okay, so I say 35.58. Let me program a pending order. S&P 500, pending order. Okay, that would be a sell limit. A pending order that sells from a higher point is a sell limit pending order. And I say, okay, there's bearish news today, but it looks like a bounce back occurring. Maybe it comes to this resistance level, which would be a more ideal place to sell from than this price. So if it comes up here, maybe you're convinced then it'll pull back down. So you say 35.58. If it hits that price, I want to sell. I'll have my stop loss above that resistance at 35, let's say 68, 10 points up, 10 full points up, 35.68 to the stop loss from 35.58 entry point, or I'm sorry, stop loss is over here, 35.68. And where's my take profit then? If I expect a big movement, maybe down to today's low. That's not asking too much. If there truly is negative momentum, when the US market opens, it could push this back down to today's low. So 35.45 as an example. And so there's my pending order. Okay, if it comes up to this price, I'm selling down to today's established low, somewhere down in this range down here, with my stop loss up above this resistance. Maybe I don't need it quite so high, right about there. So I'm risking about half of my potential profit, maybe a little more than half, but a lot less risk. But being patient with the potential to drop, even if it goes the wrong way, it would have to break through this resistance and this one before I give up. That's called widening the strike zone with your technical analysis, going in the direction of the fundamental news down, but if it goes the wrong way, not giving up until it breaks the first resistance level and the second resistance level, then I'm out. Okay? So a couple different concepts here. Pending order going in the direction of the overall doom and gloom if it reaches that spot. And also stop loss above 2 resistance levels to avoid a quick breakthrough here that then goes the right way. Maybe you don't want your stop loss too close. Python, good question. You're asking about the volume of the trade on crude oil. You would put the right trade size, the right volume for your trade size for what you're looking to make in potential profit, for what you're willing to risk. So don't look at my trade sizes when I'm on a demo account with a balance of 100,000 or more, right? The trade size is irrelevant to what your trade size might be on your account. And if you're placing the trade using our web trader, you'll see your percent risk. If you set your stop loss and your trade size, when you're setting up your oil trade, you'll see with different trade sizes as you adjust the volume, what you're risking to your stop loss price by placing the trade through the web trader platform or the AvaTrade Go mobile app. Okay. So trade size, base it on your balance and your risk tolerance and the potential profit you're going after. But the strategy applies no matter what trade size you're using. Okay. The concept applies. So I like the idea here of going after if this pulls up much higher, and you see indeed this did break through. You see it broke through here. You see the top of this wick here? That might be the spot where it tries to reverse, right? Might be trying to get to that spot. So it might not reach our pending order up here if it reverses off the top of this wick. But we'll see. We're being patient. It might try to come up to this resistance level that we drew out here, which means we got a nice entry point if it reaches this spot up here. Okay, it certainly broke this little resistance here, which I kind of expected because it tested it once, twice, 3 times, 4 times, and it came back up again. Usually if it tests it enough times, it'll break the resistance, which it just did. So let's see if it reaches our pending order, and we'll get a nice opportunistic entry point at a high price in what we deem as an overall downtrend with doom and gloom today on the markets. Okay, so this is the power of being patient, and maybe it reaches our pending order there. All right, and if we look at Nasdaq, we've got same thing happening. A little bit of an uptrend after an overall downtrend, right? We're in a downtrend. You see the downhill slope in the bigger picture, but we see a pullback up, trying to reach some of these resistance levels up here. Okay, that's the Nasdaq. Maybe with the Nasdaq, I say I'll be less patient. I want to take the trade right now, maybe, and I say lot size, I don't know what I want to put. Let's say Nasdaq moves a lot quicker, a lot more points at once than the S&P, so maybe I do a quarter of a lot, okay, with the Nasdaq. Quarter of a lot. Oh, that's the stop loss. Sorry. Maybe I do a quarter of a lot here. Let's pick and then type it in. There we go. Quarter of a lot. Stop loss, we have to program to a place that makes sense if we sell now, right? If I'm going to sell now. So let's say I sell on Nasdaq. I say, okay, I think maybe now it's reached enough resistance over here that maybe I think it'll drop. You see this slope I drew? It reached the top of the slope. So maybe I think it'll test a little further, but eventually drop. So I get in on a market move on this one, a pending order on the other one, if it continues to go further up, okay? There are other pending order open. You see the S&P 500 just opened. So our patience paid off. It went up to a higher point to sell on that S&P 500. Now we look at the Nasdaq, we say, okay, where would we put our stop loss? And maybe I would put it above this resistance here. See, this is a major resistance point. Resistance, resistance, resistance. So maybe about 11,900. Okay, so I go to the Nasdaq, I put my stop loss 11,900. Okay, my take profit, maybe it's down here at today's low, somewhere around that area, 11,820. So we got a decent technical entry point. Okay, we got a decent technical entry point, and now we're selling in the direction of the fundamental news, right? Stop loss up here. It would have to break the next resistance level. With the doom and gloom today, likely it won't break this resistance. If it does, then the fundamental news changed, right? If it breaks it, then the fundamental news changed. A lot of times before a reversal back down, you'll see a breakthrough candle like this, a false breakthrough, and then the reversal. So it'll be interesting to see if that's what this big candle was, the last upward movement before a reversal. We'll keep an eye to see what happens there. Gold. I had some questions about gold, so let's have a look. Gold also looks like it's trying to reverse with the markets. Remember, we said gold through this pandemic has been dropping when the markets drop, going up when the markets go up. And look, the markets climbed up, so did gold. The markets look like they're trying to drop back down, and look what gold is trying to do as well. So we see a resistance level here. What if I take a quick sell on gold, put my stop loss above the high point? This is a scalp move. We see it starting to try and reverse. You put your stop loss above the resistance that it established here, which would be at what, 1863. So this is a limited move. Stop loss 1863. Okay, so I got my stop loss here, limited risk. My potential profit would be much bigger to the low that it already hit down here today. Here's the technical support that it already hit when all the fear was hitting. So let's say 1857 is a potential spot to take profit. 1857. Again, just going with the fundamentals with technical entry points that are advantageous. Okay. The S&P 500 is on the futures, Natalie. Our indices trade on the futures. So yes, the S&P 500 is trading and open already. You're talking about my pending order. Never mind. And you're right. I already noticed that. The pending order already opened. Absolutely. And here goes gold trying to climb up. So this is a little bit of a breakthrough move. If we go to 1 hour candles, we see our gold trade closed. Okay, limited risk. And that's what we do with limited risk moves. That's why there's an example of the importance of a stop loss, right? Importance of a stop loss. Now it reached the next resistance level right here, right? So you could say, okay, re-enter. Re-enter, we had limited risk. Now it's reversing off this resistance. So I put my stop loss up at 1867 now. Okay, a re-entry, limited risk. You can re-enter. This is re-entry in live fashion. Now 1867 to the stop loss. Okay, and potential profit could still be back down here at 1856, 1857. So we go back, we do potential profit down at 18.57. Remember I mentioned about those stop out moves? A lot of times before a reversal occurs, you get that big spike in the current direction, then the reversal occurs. And sometimes that hits your stop loss if you have it too close. So an example of what we just did, we had our stop loss pretty close to limit risk. It went up, hit it. Now we got in at a better price, 18.63 or so, and we've got a stop loss a little higher now with the re-entry. Okay, we could have had our initial trade with the stop loss further away. In this case, we had it closer and re-entered. Now let's see what happens with these three moves. I suspect those were the stop out moves. Those were the spikes. And now we may see a reversal back towards today's lows on these assets. No guarantee, but let's see what happens with these three. And we'll take a look at it next week, maybe when we do the next webinar. Any questions before we end things today? We've been going for almost an hour. We've got some nice sample moves here on a couple indices and on gold, and we've got a pending order, couple pending orders waiting on oil, whether it goes up or down. We're going to get in on oil here eventually, either into the gap or bouncing off of it. All right, great, everybody. Thank you for joining. I think you're going to see some really big movements as we go through the announcements that are going to occur later today out of the European Union and the US. I think you're going to see some major moves on the charts today. So get those pending orders in, get your buy stops, your sell stops ready. I think you'll see some big moves today on many of the assets. All right, you're welcome, everybody. Natalie, you'll catch on. Sounds like you're new to things. You can go and look at the recordings as well to get repetition on some of these ideas. And I think we already see gold making its move now, as well as some of these indices. All right, everybody, thank you very much. Good luck with your trading the rest of the week.